Despite a red day across much of the market, Robinhood stock finished Friday in the green, closing at $130.36, up by about 2.5%, or $3.28 per share. That might not sound massive, but it's actually a very interesting signal when you zoom out. The broader indexes were down, tech was weak, and even some AI-related names lost ground. Yet Robinhood, ticker symbol HOOD, managed to climb. That tells us there's a narrative shift happening beneath the surface. Investors are starting to take this company seriously again after what's been a rollercoaster year. Let's talk about why that's happening, what's driving this momentum, and why the real test for Robinhood starts now. The first thing that's fueling this latest move is the company's stunning third-quarter earnings report. On November 5th, Robinhood reported record revenue and earnings that blew past Wall Street expectations. The company pulled in $1.27 billion in revenue, that's double what it did in the same quarter last year. Earnings per share came in at 61 cents, which is about triple what analysts had forecast. These are the kinds of numbers that make investors sit up and take notice, especially from a company that not too long ago was being written off as a one-trick pony of the pandemic trading era. A big part of that growth came from crypto. Robinhood's cryptocurrency transaction revenue surged more than 300% year over year. That's a staggering figure, and it shows that crypto isn't just back, it's once again becoming a major profit driver for financial platforms. The timing couldn't be better for Robinhood. With Bitcoin back above the $90,000 mark earlier this quarter and renewed excitement around institutional adoption, retail traders have started flooding back into crypto. Robinhood has positioned itself perfectly to capture that resurgence. But there's more here than just short-term crypto hype. Robinhood's management has been executing on a long-term strategy that's finally beginning to bear fruit. They've spent the past year broadening their business model beyond commission-free stock trading. The acquisition of Bitstamp, one of Europe's oldest and most trusted crypto exchanges, has opened a major new growth channel internationally. Meanwhile, new products, like advanced order types, futures trading, and credit card offerings, are attracting a more diverse user base. The company's once criticized trading app for beginners reputation is evolving into something closer to a multi-asset, multi-market financial platform. And the market is starting to recognize that shift. Over the past week, multiple analysts raised their price targets on the stock. Citizens moved their target from $170 to $180 per share, maintaining a market outperform rating. Keefe, Brewett and Woods and others also lifted their expectations, citing Robinhood's accelerating revenue mix and strong operating leverage. Analyst optimism is often reactive, but in this case it reflects something real, improving fundamentals, expanding reach, and a company that's finding its rhythm. Now, what's particularly notable is that all this comes at a time when the market environment has been tough. Rates remain high, tech multiples have compressed, and risk-on sentiment has wobbled. So when a company manages to outperform in that climate, it says something. Robinhood isn't rising because of speculative hype, it's rising because the numbers justify it. However, the story doesn't end there. Every strong quarter brings new expectations, and that's where the real test begins. Investors are asking, can Robinhood sustain this kind of growth? Because if there's one thing markets hate, it's a blowout quarter followed by disappointment. Let's break down the potential challenges ahead. The first is volatility. Robinhood's revenue is tied closely to market activity. When people trade more, the company earns more. That makes sense, but it also means performance can swing dramatically with investor sentiment. If markets calm down, or if the next crypto correction hits, activity could slow and revenues could dip. The second challenge is regulation. The company's business model still relies heavily on payment for order flow, a practice where market makers pay Robinhood to execute retail trades. This model has faced criticism and scrutiny from regulators, especially in the United States. While no outright bans are imminent, any change to those rules could impact profitability. Third, there's the question of execution risk. Robinhood's move into crypto and European markets is ambitious, but expansions like this come with integration challenges, legal complexity, and new competitive pressures. Bitstamp, for example, has a strong reputation in Europe, but merging cultures, systems, and compliance frameworks takes time. Then there's competition. Traditional brokers like Charles Schwab and Fidelity are modernizing fast, while upstarts like eToro, Coinbase, and Revolut are vying for the same younger demographic that Robinhood captured early on. That means customer loyalty can't be taken for granted. Robinhood has to keep innovating to maintain relevance. Another subplot that's caught investors' attention is the discussion about possibly holding Bitcoin on the balance sheet. Management confirmed they've considered the idea but haven't committed to it. On one hand, such a move would align with the company's crypto-friendly image and signal belief in digital assets. On the other, it could expose Robinhood to additional volatility and accounting challenges. It's a fascinating idea that captures where the company sits, between traditional finance and the frontier of fintech. Now, even with these risks, there are several reasons investors remain bullish. For one, the company's balance sheet is in good shape. Robinhood has roughly $26 billion in assets and about $18 billion in liabilities, giving it a comfortable financial cushion. It's also generating positive free cash flow, a far cry from the days when the company was burning through capital just to stay relevant. Another bright spot is user engagement. Robinhood has managed to increase both monthly active users and average revenue per user compared to last year. That's a crucial combination. It means not only are more people using the platform, but they're also doing more with it. Whether it's trading crypto, equities, or options, the engagement level is rising. And beyond the numbers, there's an important shift happening in how people view Robinhood as a brand. The company took a huge reputational hit back in early 2021 during the GameStop saga. Many retail investors felt betrayed by the trading restrictions during the meme stock frenzy. But fast forward to now, and Robinhood has slowly been rebuilding that trust. The expansion into crypto and new features like 24-hour trading have helped reshape the narrative, from the app that halted trades to the app that's empowering investors globally. So, where does that leave us heading into next week? I think we're at a really interesting inflection point. Robinhood just delivered one of its strongest quarters ever, and the market is rewarding it. But now comes the hard part, proving that it wasn't a one-off. The key things to watch over the next few months will be, first, how the company maintains its crypto momentum if the digital asset market cools off. Second, whether we see consistent growth in core trading revenue outside crypto. Third, how effectively Robinhood integrates Bitstamp and expands its European presence. And fourth, whether it can keep costs under control while scaling new ventures. If they can do all that, there's a legitimate argument that Robinhood could evolve into a true financial super app, one that blends traditional investing with crypto, cash management, and even credit. That's the bull case, and it's looking more credible now than it did 6 months ago. But if the company stumbles, say, if crypto revenues drop sharply, or if user growth stalls, the stock could retrace quickly. Remember, this is still a volatile name, and traders love to pile in and out. The beta on this stock is high, meaning swings can be amplified in both directions. Still, in the grand scheme of things, Robinhood has done something impressive. It's transitioned from being seen as a speculative, hype-driven fintech to being viewed as a legitimate financial player with real earnings power. That's not an easy transition to pull off. What's interesting, too, is how the stock is behaving technically. After dipping earlier in the year amid broader market weakness, Hood has steadily climbed back above key moving averages. The fact that it gained on a day when the market dropped tells you buyers are stepping in with conviction. It's no longer just chasing momentum, it's showing signs of institutional support. So as investors look ahead to next week, the question becomes less about what Robinhood has done and more about what it can sustain. The numbers are undeniably strong, but growth stories live or die by consistency. My take: Robinhood just proved that it can grow again, but it hasn't yet proved it can do so through all market cycles. If management continues to diversify revenue, expand internationally, and stay disciplined, then this could be the beginning of a new chapter. One where Robinhood finally graduates from being a symbol of the retail trading boom to a cornerstone of the next generation of finance. If you're a long-term investor, that's worth watching closely. The market may be rediscovering Robinhood, but the company still has to earn its redemption one quarter at a time. So yes, Hood had a great Friday, but the real test starts now. Because strong earnings can lift a stock, but only execution keeps it there. And in the weeks ahead, we'll find out which story this really is.